Hi guys, welcome to the Saving Money Show. Me, your host Sean. Well, today we're going to be talking tanker stocks, and we'll see what else we can fit in. Perhaps a bit of what I think about earnings. Now, obviously, I've recorded this before the PayPal and everything, and I think PayPal will smash earnings. I think Square will do well. However, if you don't have Square, you might want to wait on PayPal earnings and see how they do, and then take an entry. But to tell the truth, if PayPal crashes earnings, Square's going to rise, as people will assume that's going to crash as well. So you might want to just pick up Square. Now I'm going into it's the wrong spreadsheet. This is Neo's one. But while I'm here, I may as well make it a Neo and tanker run. So their October numbers for Neo are the ES6, as we can see, 2,695. The total deliveries 5,055. The EC6 has gone from 0 to 883. Now, month on month, it's been increasing, the deliveries. That's why the rise. Now, the rise in the share price. On top of that, it's all been good news, such as China coming out and ordering cars for them. You know, there's talks about them making their own chips, but at the moment they're sticking with Mobileye. Yeah. But they are looking into bringing that in-house, whether they do or not. We can't trade off that because we can only trade off the facts. We compare it to the other manufacturers, and we see with the people compare it to Tsla and Xpeng, but to tell the truth, I think Xpeng were more at risk from Model 3 prices coming down, because the Xpeng has entered at a lower price, and it has they get lower profit from it than the other manufacturers. So I got a lot of flack for buying in at $3 and now, and I'm thinking it's had such a run up to pull my initial investment out and play with Wkhs' money now. It's at that point where it can fall, especially with the market conditions, or it can carry on running. Right now, either way, if I pull my initial investment out, it won't bother me. And why not let you guys decide? Comment in the box below whether you think I should pull my initial investment out or whether I should let it run. Anyway, we're going to move on to tankers. Guys, welcome to the Saving Money Show. Me, your host Sean. If you want to help support the channel, don't forget to smash that lovely like button, and don't forget to hit the bell notification if you want to be reminded of when a video gets uploaded. And why not smash the sexy subscribe button? A lot sexier than me. Just ask the wife. And because I upload multiple times a day. And while you're at it, why not comment in the comment box down below? I'm also putting a load of free links in the description box. Why not check them out? And if you're looking for a free trading platform on which to trade your stocks and shares, why not check out Free Trade Trading with 212 and Stake. You get a free share worth up to £200 or dollars for signing up and depositing a small amount. So when we look at this chart, sorry about that, I bought an entry point into some thing for the election. Now, look at this chart. You'll see from the 3-month performance, Kcac Energy seem to be doing better. That's a 3-month chart. Now we go across to the 1-year performance, but again, that's because it's historic performance. Now you have to look at the whole picture, how UNF and DHT and Frontline perform. Now Nordic American tankers have done well, but we aren't just looking at historic share price here. We're going to look at the next year and the next quarter. Now this spreadsheet shows who is booked out and what rates, because the rates are less than what it costs to keep a tanker running at the moment. Now you can see here, I've said before that VLCCs are the ones you want to own rather than just the Suezmax. It's a big thing about how many Suezmax NAT had, and when I looked into it, that's the reason I didn't have NAT when everyone else was jumping on the hype wagon. Now you can see there the 3 that I chose all had VLCCs, Frontline, DHT and Euronav. I come out of Frontline because they trebled the flow, went from the equivalent of 1,000 shares to 3,000 shares, so they've heavily diluted you. But they have 78% at 61k. That's going forward for the next year. Now DHT are the best with 81% of their vehicles at 51k. Now, so at a lower rate I get, but sorry about that, my eyes. So 61%, 51k, but they are, how can I put it, with the fact that Frontline have diluted you, you are getting a third of the profits effectively. So that is why DHT comes up better. I'm surprised at Euronav, mainly because I think they have one of the best boards and one of the best decision makers in the tanker business. I have sold out Euronav, full disclosure. I told you about a month or 2 ago, and I was surprised to still qualify for the dividend. I sold half of it pre-dividend, and I made $1 a share profit, and the second part I sold post-dividend, and I just caught that sweet spot. I caught the dividend and I still made a profit. Now, I'm surprised that they didn't secure more on a long-term charter. They were too busy trying to get a better price. They got 60k, 48%. Now you look at the Series Maxes, you know, the best is 48k in Q2. Why is it in Q2? NAT refused to give guidance for the next quarter. They refused to give guidance for Q3, Q4. Now, what is the reason for doing that? The only reason for doing that is because they don't have their charters booked out. Don't have any. Or they have very little and they're embarrassed over it. Now, you remember them going on Cramer earlier on in the year saying, oh yes, we have so many of our ships booked out. You'll have to come to us begging because we have so many of our ships booked out. No, they're not saying that anymore. Frontline has 77% of their Series Maxes at 30k a day, which is a good price. Euro have 48% at 36k. And that means 52% are losing money effectively of each of theirs. And 10k 57% at 25k day. Ultra Max Frontline 67% of 15k a day, of 10k 47% of 15k. Now these are important because you want a higher percentage purely because even if it's a break-even percentage, because as you can see now if you see this, the Power and Partners daily briefing comes out with all the rates. Now you will see how, look at this for the Series Max, 3,600. Now it costs over 8,000 a day to keep it in water. Look at the Ultra Max, minus 6,800. For the VLC, 8,100. No, this is just poor. Now you would think that with the price of oil dropping, that the rates would be going up, but what's happening is, so I think what can we take from this? I think we can see that Scorpio had a terrible year. It would have had the worst year out of all the tankers. We can see that the product tankers are starting to do better than oil tankers, which means that NAT, especially as they haven't given guidance, are probably going to be bad, because we always say getting the VLCs rather than Series Maxes because that's a sweet spot, and they don't have any. Now, Frontline, as I said, booked so many that you should expect a rise, but if you're in Frontline, you might want to jump out as soon as the rise comes, because once people realise the dilution means they won't get enough of the proportion of the rise, you may see a fall. Euronav booked a high rate, but not enough of their ships. Other than that, I think with earnings, looking back, I think paper will have crashed, Square will have beat. Peloton, I'm going to go for 27 cents a share, earnings per share beat. By the time this comes out, we all know. There is also something else while I'm here. Let's see if Tsla announces initiation of clinical trial with COVID-19 patients in Brazil with nasally administered ferroliumab. They're basically doing a trial with their drug, with no drug, and with their drug with dexamethasone, to see, which I think is smart, so you can they could see not only if their drug works, but also if their drug works in combination with another one. Anyway, don't forget to hit the like button, comment in the box below, and subscribe if you haven't. I know 60% of you haven't. I'll see you in the next video. That's all for now.